Earnings to go through. So let's straight away get to the CNBC-TV18 list of top stocks to watch this morning. And we have our team standing by for exactly that. Guys, good morning to you. Mangalam, off you go first. HUL. So I think we have to go far beyond the first headline, which is just 1.5% top line growth. Looking at all the internals, how do you sum it up?
Well, the only way to sum it up is that macros are weak, because you can't blame the company, when there is an urban slowdown, and across the board where you see it from either Nestle, Tata Consumer, or the other companies that I'll be talking about right now as well. So revenues, 15,500 crores. The street was working with a number of 15,665 crores. Not that the street was expecting too much as well, but these numbers have come slightly shy of expectations, and a large part of that could be attributed to sentiment weakness itself. Volumes have grown 3%. The street was working with 4 to 5% growth. Even the EBITDA and the net profit, as a result of which, have been slightly shy of expectations. In that as well, a couple of segments of the company did extremely well. We had beauty and wellness do extremely well for them with a 7% growth. Home care grew by about 8%. It was personal care where the company had to do some price cuts, and food and refreshments where, tea has been facing some challenges which were under pressure. So let's see where this comes about from here, because the management has called out some inflation in raw material and low price growth going forward. My sense is that the stock opens mildly in the red, but thereafter stabilizes, given the fact that it's already corrected 10% from its highs.
Okay, all right, Mangalam, thanks a lot for that. Well, the other one we're focusing on is TVS Motor. So, Darshan, yesterday those numbers look disappointing, but I think the management in pockets in that con call was sounding fairly optimistic. Tell us more about TVS Motors.
Morning, Nigel. So TVS had reported earnings just during the last hour of the trade, and earnings were slightly lower than estimates, but commentary looks positive. So what everyone wants to know, how is the demand during the festive season? So TVS is saying that in the Navratri period of in those 9 days, industry's demand was 11%. The growth was 11%. After that, there was some slowdown, and so far in the festive season, industry's growth rate is 4%, while company has outperformed. Now it sees demand improving during Diwali, and for Q3, growth rate for the industry as per TVS is seen in the range of 7 to 8%, and to which company is saying it will outperform the industry. Regarding the exports also, there is one positive commentary. Africa, which forms 57% of exports revenue, company is saying it has hit the bottom, and now it's seeing growth is expected to see from Q3 onwards. And regarding the launch also on three-wheelers, company is expected to launch three-wheelers electric vehicles very soon. So overall, commentary looks positive after an inline to slightly miss on earnings front.
All right, Sudarshan, thank you very much for that. Well, let's go back to Mangalam, because there's more from the FMCG in consumer space, Pidilite and United Spirits. Mangalam, morning again.
Well, the headline for both of them would be soft revenue growth. If you look at Pidilite as well, revenues grew by about 5%. The street was working with a growth of 6% odd. The EBITDA came in largely in line with expectations. The margins at around 23.8%, and the net profit at 540 crores as well. What was soft? Consumer business. Volumes grew 6% versus expected 8 to 10% growth. What, did well for them was, one, there was expansion of 300 basis points on the gross margins, and the B2B business grew by about 21% in terms of volumes. So that's a positive. The company remains optimistic for the second half. For United Spirits as well, the prestige and above volumes actually declined by nearly 4% as against flattish expectations. Popular was down by about 8% as against expectations of 6 to 8% decline as well. On the reported front, these numbers were largely in line with expectations. Expect the stock to open in the red, but thereafter we may see some recovery, largely because the second half for spirits sector is extremely good, and then you have the tailwind of the Andhra regulation coming in force as well. So opens in the red, may see some recovery.
Okay, it seems, it's only when Mangalam talks about jewelers is when the growth conversations kick in. Apart from that, everything else in consumer seems to be subdued, right? Just the jewelers, right? That's the only standout.
That's the jewelers, because people are a little conscious as well now. They're looking to save via gold. Over the last 1 year or so, we've seen a 30% rally in gold prices itself. So jewelers are doing well because the formalization theme is playing out. There too, though, the margin expectations are weakened because of lab-grown diamonds and the decline in diamond prices.
Okay, consumer headwinds. Mangalam, thank you very much for that. Let's go back to Sudarshan now. The news on Escorts and Sona BLW is out. Sudarshan, fill us in.
So it's been a long pending deal. First time CNBC-TV18 had reported about this deal in October 2023 that Escorts was looking to sell its railway business. And after that, again in September, we did report about that Escorts Kubota has been in talks with Sona BLW for the railway business deal. Now, yesterday, this news break is confirmed and both these companies have announced the deal. So what is the deal? Escorts Kubota will be selling its railway business to Sona BLW, and deal is done at an enterprise value of rupees 1600 crore, and it will be done on a slump sale. How will this deal be funded? Recently, Sona BLW had done QIP, and through that they had raised 2800 crores. So this deal will be funded by QIP and internal accrual. So what does this deal do for Escorts Kubota? So basically, its parent company Kubota has been wanting to sell railway business because they wanted to focus on the core segment, that is agriculture and construction. For Sona BLW, it says this railway business acquisition of railway business of Escorts Kubota will be earnings accretive from the very first year. Also, it will enhance because it wanted to expand the mobility segment. So the acquisition will help. Lastly, talking about the Q2 results of Sona BLW, results have been steady. Revenue was driven by scale-up of EV program. Order book as of Q2 was rupees 23,000 crore, and new orders in Q3 have come in at rupees 1,200 crore. So overall, it's positive for both Escorts Kubota and Sona BLW as far as the railway business deal is concerned.
Okay, so going with green on both those two. Thanks a lot for that, Sudarshan. Well, let's hop across to Abhishek. He's here to tell us about AU Small Finance Bank. Abhishek?
So Nigel, to begin with, AU Small Finance Bank, operationally a strong quarter for them with reference to the net interest income to the operating profit level. However, slippages or asset quality have deteriorated for them. That is in line with what you are seeing with other players in the unsecured segment as well. So slippages increased more than 35% on a quarter-on-quarter basis. The annualized slippage ratio came at more than 3% in this quarter versus 2.4% in the previous quarter, and that is why you saw the gross NPA ratio inch up by 20 basis points sequentially to about 1.98% versus 1.78% in the previous quarter. On the guidance that they have given out for FY25, the guidance on net interest margin has been increased to around 6% from 5.7 to 5.8% earlier. However, the credit cost guidance has also been increased to 1.3% versus 1.1% that they had earlier. This is on account of the fact that unsecured book had a credit cost of about 8.3% in Q2 FY25. So they have inched up the credit cost guidance on unsecured portfolio to 8.5% range in H2 of FY25. So on their numbers, the PNL is a beat on our poll. Back to you.
Okay, all right, got it. Thank you very much for that. Abhishek, we'll watch out for AU Small Finance Bank. We have Vinny now joining in with a bunch of other stocks in news. I'm sure plenty of them are on earnings. Vinny, good morning.
Absolutely. All the three are on the back of earnings and they're pharma companies. So first we have Dr. Lal PathLabs. We are expecting a bit of a positive move here. Revenue came in line with estimates. While we're seeing the profits was better than estimates, margins have seen an improvement of 70 basis points. The company has guided for around 11% year-on-year basis growth for FY25. And strong results were seen even in the tests per patients, and Swasthfit had seen a very strong growth for the company. So it's interesting to watch out for Dr. Lal PathLabs, though the company has highlighted a bit of an increased competition from hospitals in the diagnostic space. That is something that we should be watching out for. Aster DM, that also seen a strong growth coming in, 17% revenue growth, sharp improvement in terms of margins, EBITDA margin around a 500 basis point improvement on a year-on-year basis. And overall, the core business, that's the hospitals business, I beg your pardon, as well as clinics business, that has seen a very strong growth and driving the growth for Aster DM. So we're expecting a positive move here. Other than that, Piramal Pharma also we're expecting a positive move. The revenues have seen a good growth, 15% growth year-on-year basis. Profits of the company have seen a very good jump up. 22 crores is what the profit has come in at versus last year of just 5 crores. The CDMO business of the company, that's doing well, 24% growth there in Q2. And biotech funding, that started seeing an improvement. That's the highlight coming in from the management. So we're expecting a positive move in Piramal Pharma as well.
All right, Vinny, thanks very much for that. So keep an eye out in Piramal. Navin, Fluorine is the next one. Sona is standing by. Sona, morning.
Good morning. Well, Navin Florine's numbers not as bad. In fact, we've seen a YOY growth for the company. Revenues improved 10%. We had an EBITDA growth of 10%. Margins flat on a YOY basis. Profits were down, but that was because of higher taxes. And sequentially, we've seen a growth this time around. But it's the chemicals business which has seen a degrowth again, down 15%. But the HPP revenues were up 23%. CDMO revenues were up 41% for the company to come in at 68 crore rupees. In the conference call, the company also mentioned that there's strong order visibility based on firm orders for Q3 and Q4. That is the case for FY26 as well. Brokerages, though they have cut the EPS estimates, they are positive on the forward-looking outlook. Citi says pick up in the CDMO business and they expect commissioning for the new R32 plant in February 25 to augur well. They also talk about, Jefferies also talks about the commencement of 2 new contracts in CDMO in the Q4 that should jumpstart growth. So positive commentary is something that should keep the stock in green.
Okay, all right. Got it, Sonal. Thank you very much for that. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are TVS Motors, Pidilite, Escorts, Kubota, Sona, BLW, AU Small Finance Bank, Dr. Lal PathLabs, Aster DM, and Navin Fluorine. The ones that have negative news flow around them are HUL and United Spirits.